the company has seen a surge in conversion of vehicles, and on an average, the financial year 23-24 monthly vehicle addition to CNG pool was around 15,500 vehicles per month, which was around 14,000 during 22-23. It's a growth of almost 11%, which is a healthy growth. And automobile manufacturers are now coming with new variants of company-fitted CNG models, and which is adding to our sales volume as the CNG vehicles numbers are increasing day by day. I'd also like to inform that in our GAs, the penetration of CNG vehicles has reached around 27-28%. The company strategy is to maintain a balance between the volume growth and profits, and will keep focusing on new GAs for volume growth. We are also looking for diversification, as our MD told. Renewables is one area where we are focusing. And as far as the capex was is concerned, last year we added 90 new CNG stations and 3.3 lakh new domestic connections. Along with that, in terms of physical infrastructure, we added 187 kilometers of steel pipeline and almost 3,000 kilometers of MDP pipeline. So with this, I welcome everybody to this annual earning call of IGL, and the floor is open. We can start the Q&A session.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Probal Sen from ICICI Securities. Please go ahead.
Thank you for the opportunity. Good evening, sir. A couple of questions. Number one, with respect to the sales target of 9.5 MMSCMD. Now, if I look at the average volumes that we have done in FY24, that translates to a fairly ambitious 13% growth that we are targeting in FY25. Sir did mention that it could be done through focusing on industrial segment as well as in new GAs. Is it possible to, sir, give a little bit more granular details in terms of how much growth we are expecting from new GA and which GAs we are referring to specifically? How much from industrial and how much from our core area? Any broad range would still be very, very appreciated.
When we say new GAs, we are talking about GAs outside of Delhi NCR, that is Delhi, Gautam Budh Nagar and Ghaziabad. So, that is 90% of our business presently comes from these 3 GAs.
Right.
And 10% comes from the other 8 GAs. So, that is the new GAs we are targeting about, which we got in 16-17 onwards.
Okay.
That is the segment we are focusing on. Second is that industrial volumes were flat last year due to the pricing pressure of the alternate fuels. So this year we feel, because the fourth quarter we could see uptick in that industrial sales. We grew by 10% both sequentially as well as quarter on quarter compared to last year. So that we feel that we still have scope for improving that further in that direction, as well as the CNG sales in the new GAs.
Right. So, sir, this 9.5 is the average volume that you're targeting, and that's the exit rate that you're looking to do for FY25?
So that is the average we are targeting.
Average being targeted. That's helpful. The second question, sir, was with respect to this, LCV and MHCV segment. Are we seeing any traction in the commercial vehicle segment with respect to our CNG segment? And if so, what kind of volumes do we expect it? I mean, is it material enough or will it turn material in the next few years, in your opinion?
So CNG commercial segment definitely is growing healthy. Last year the conversion was, say, around 15,500 average per month. as compared to 14,000 in the earlier years, and most of them was in the commercial segment. So 10-11% growth we are seeing. Only the bus segment, especially the DTC segment, there is a degrowth there, but that is being made up through passenger vehicle as well as the commercial segment.
Understood.
Additionally, for the commercial vehicles, if you see the monthly addition to the CNG pool is around 2,400 approximately in the recent months. It used to be around 1,800, 1,900 kind of numbers. So we see a uptrend in the commercial vehicles which are being added to CNG.
Understood. So the second question with respect to margins. Now we have seen some moderation, obviously, in terms of spot LNG prices, but at the same time, the priority sector allocation continues to go down. So just two parts. One was, what was the allocation of APM or domestic gas to priority segment this quarter, and what is the guidance you have for next year? And what sort of spot LNG, how much of spot LNG is our overall sourcing as of now?
The current mix would be around, say, 72% is domestic allocation, including HPHT, and 28% is RLNG. So that's the mix. And with the softening of prices, the gap between the domestic as well as the RLNG has reduced. Now 10-12% gap is there. Like 27, we are able to, the landed cost of domestic gas is around 27, 28. And we are able to get some contracts at 31, 32, the landed cost in terms of RLNG.
Right.
But that is the RLNG spot is slightly volatile as of now, so you sometimes get favorable. We have lined up medium and long-term contracts to reduce the volatility. So going forward also, we feel that the domestic allocation with the increase in domestic production should not go down much. However, we also feel that increase is also a challenge given the fact that new GAs will come on stream. So domestic allocation going up would definitely be a challenge, and in case that does so, that will be a pleasant surprise to us, and we'll be happy to pass on the benefit to the consumers.
Right, sir. Well, one last question. In that backdrop, sir, I believe you had given a margin guidance of somewhere around 7 to 7.5 rupees in terms of EBITDA. Should we still maintain that for 25 and 26? Is that a sort of a reasonable level to assume?
Yes, 7 to 8.5 is the range that we feel would be a reasonable EBITDA per SCM range.
That's quite a range, sir. 7 to 8.5 is the range that we should be working in.
So present last year we did 7.67.
Right. Understood, sir. Thank you so much for your answers. I'll come back if I have more questions. Thanks.
Thank you, sir. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. We have our next question from the line of Maulik Patel from Equirus Securities. Please go ahead.
So thanks for the opportunity. So few questions. You mentioned that the areas outside Delhi and outer Delhi, which are approximately 7% of your CNG volume, right? Am I right?
No, 90% comes from Delhi, Gautam Budh Nagar and Ghaziabad, and 10% is from the outside GS presently.
Sir, at what rate that they grew in this particular quarter?
I think the Delhi was flat, but other than that, Gautam Budh Nagar, Ghaziabad, they grew at around 10%. And outside GAs, the base is very low, so the number, if I tell you, say for example, it grew at 149%, but that doesn't make any sense because the volume, the base is very, very low. So any increase there will not be appropriate to capture the growth. Similar is with Kanpur, that grew at 123%. Meerut, Muzaffarnagar, Shamli grew at 60%. So overall, you can say that 15% growth is there in the new GAs. That's reasonable estimate, because once the good numbers come and then you grow at this level, So that will make sense. Right now, the base in couple of GAs is not capturing. I mean, it's normal to say that they are going at 150, 160%. So the base is very low.
And sir, in terms of CapEx, what we have done around 1,200 crore this year, is that a large part of the CapEx is going towards the new GA, which are the areas like Ajmer, Karnal, Kanpur, and Muzaffarnagar and others?
Around 40% is going through our this Delhi and Noida, Greater Noida area, and that 60% is going to the new GAs.
Okay. Sir, can I just suggest something? Just a suggestion from our side. Sir, in terms of a volume now, if going on forward, if you start giving us Delhi volume CNG separately, that probably considers as zone 1. Zone 2 might be your Gautam Budh Nagar, Ghaziabad and Gurgaon. And zone 3 can be new GA. If you start giving the three numbers separately, it will be easier for us to track the volume growth on each of the three geographies. I understand that all the GAs in the new will have a very different growth rate, but one number across the new GA category will be very helpful from a forecasting perspective, sir.
Okay.
Thank you.
Thank you, sir. We have our next question from the line of Somaya V from Adventus Park. Please go ahead.
Yeah, thanks for the opportunity. So first question is on the growth. So if I look from an exit of this quarter Q4 versus next year, it looks like a 1 MMSCMD kind of a growth. So this 1 MMSCMD entirely, or say 80-90% you're expecting from newer GAs, or is there something that you're building in Delhi NCR also?
You see the industrial, commercial and the PNG segment, if I say the domestic, industrial and commercial. So that will continue to grow at around 15%. Our belief is that, and since the reasonable base is there in Delhi NCR, Delhi we have around 6.65 million domestic. So that we will continue to add around 3 lakh connections. This year also we are targeting. So that is around 15-16% of the total connections. So that growth will continue like that. CNG, whatever, the impact is there of DTC, we will see how we can absorb that and continue to grow in Delhi. NCR, Gautam Budh Nagar, Ghaziabad, Rewari and other regions, Gurgaon, so they will continue, the CNG plus PNG, they will continue to grow at 10 to 15%. That is our expectation, that they should continue to grow.
So, Delhi NCR, you are looking at a 10% plus kind of a growth in CNG this year. Is that the right understanding?
For Delhi, 10% would be a challenge because the base is also very big. 70% CNG sales is from Delhi. Out of 50 lakh kg per day, we do around 35 from Delhi. So that growing at 10% would be a challenge. Would be say 4 to 5% growth there. But outside of Delhi, including Noida, Ghaziabad, Gurugram, everything will grow at 10 to 15%.
Got it. Second question is on the newer GAs. What we have won in the last few rounds. So what is the total capex on a per GA basis? What we need to spend to get that fully ramped up, and in how many years do we expect this capex to be largely complete?
Now we are ahead of our minimum work program schedule. So whatever the minimum requirement is there, that we are fulfilling, because if we don't do that, then there will be a challenge to retain the GA. So that obligation we are doing. But any expense that we are doing GA-wise, we are doing it judiciously so that the asset utilization is there. We don't want that we invest money and that the asset is not utilized, it's not giving returns. So for that, a conscious call is there that wherever we can charge the areas, wherever gas is available, we can charge it. So there we are spending. Fortunately, in most of our GAs, other than, say, the new ones, like Banda, Mahoba, Chitrakoot and Ajmer, some areas. Other than that, charging gas to those areas is not an issue. We have the trunk pipelines as well as the connecting lines ready. So we are a little bit judicious in spending in our new GAs, so that nothing is idle. So in that sense, Ajmer we have spent, and now we are a little cautious in expanding aggressively in those GAs.
Got it, sir. So the current capex run rate that we have, so just to keep up with the minimum work program, so next couple of years we'll continue to spend in a similar way. So what are the capex outlook for the next couple of years, very broadly?
No, this year we are targeting 1,800 crores, 17 to 1,800 crores. We did last year 1,270. Now this 1,800 crores is mostly in our core areas as well as some amount in the LNG and CBG. So other than that, most of the capex would be in the core area. And in case any opportunity of, say, inorganic growth or some new renewable opportunity is there, so that is not included in that 1,700, 1,800.
Okay, so one last question.
Yeah, so basically around 1,200, 1,300 crore is what is going in our core area as of now. And for this year, we are expecting that we'll be able to, towards diversification in LNG and CBG sourcing, we'll spend around 400 crores or something like that. And this amount is something which is spent not specifically on MWP. It is much more than, a little more than MWP, because we have to basically build a basic infrastructure in all the new GAs. And as far as the amount in different GAs are concerned, different geographies have different challenges, and the size of the GAs are different. So from that perspective, comparison among the different GAs would be difficult. But from our side, we are basically focusing on whatever infrastructure we have already built to consolidate it and then try to cater to the needs of the customers.
But so one question on the opportunity set on these new GAs. I
would request you to rejoin the queue as there are
sure.
waiting for their turn.
Thank you.
Thank you. We have our next question from the line of Nitin Tiwari from Phillip Capital. Please go ahead.
Good evening, sir. Thanks for the opportunity. Sir, would be helpful if you can provide some more color on the vehicle addition part. So if you gave the vehicle addition number for the full financial year. So what is the number for the fourth quarter? One is that, and also a breakup in terms of different vehicles, and how has the trend been in terms of a monthly progression? I mean, if we look through January, February, and March, so how has the vehicle addition proceeded? So that would be my first question.
So if I tell you about the conversion numbers, April number, the latest one which is available is 15,500. I'm talking about total including retrofitments. March, the number was 15,700. February, it was 15,800. January was maybe because of the years, it had the new models were available. It was 19,000. Before that, December and prior period, it was 13,000, 15,000 kind of numbers. If you talk about specifically, I think you are referring to impact of EV. So if I talk about specifically the taxi segment, that number is basically moving up, and it has reached 2,100 in April. March also it was around 2,000. February it was around 1,950. And before that, January it was 2,300. December it was 1,700. So it's kind of moving like that.
Okay. So basically, segment is not looking impacted to you in terms of because of any EV policy or any such issue, right? At least for now.
Yes. At this moment, we don't see any negative impact of the EV policy on taxis in our decision.
And so my second question is related to the other CNG volume opportunities we were exploring with respect to interstate buses and dumpers. So would be helpful if you can provide some update in terms of if there is any progress in terms of conversion of dumpers or interstate buses. So that would be my second question. And also in terms of DTC buses, how many more are remaining for conversion to EV as of March end?
So regarding this conversion of dumpers, so we have sanctioned a pilot study in one of our GAs, Banda and Amirpur area, that's the mining and sand area. So there we will be demonstrating 2-3 dumpers conversion and then demonstrating the benefits of conversion to the transporters there. So that should be on stream in another 1 month or so. In addition to that, regarding DTC, so we have around 1,200 buses. They have gone off-road, and over 30 stations they have been decommissioned. The balance is, I think, another 1,800 or so, 1,800 buses, including some spare that they have. This is including the spare capacity that they have, so 1,800 more or less. So that we feel will go away in next 2 years' time. And what was the another question?
So it was on dumpers and interstate buses. So you were...
We are in discussion with Uttar Pradesh, Uttarakhand and Rajasthan. So they have agreed to do some pilots with 200 odd buses. Uttar Pradesh has agreed. And Rajasthan with 20 buses and Uttarakhand also with 200. In addition to that, Uttarakhand has also, I think, lowered the tax on CNG buses. So there was some news item regarding that. So as you are aware that CAQM mandate is there that within Delhi NCR, only the Euro 6 compliant and CNG vehicles or buses are allowed. So that is helping us when we discuss with the roadways, the state roadways. So they are positive about converting to CNG, and we have told them that en route we can provide them the refilling facility. So with these 200, 300 odd buses from UP and Uttarakhand and Rajasthan also 20 buses, so we'll be able to demonstrate it to them, and hopefully in future more conversions will take place.
So any sense on what the per day consumption of these buses could be, interstate buses, and secondly, sir, in terms of dumpers also, so what is the feedback from the dumper operators when you are interacting with them? Because this would be a significant cost for them for them to convert their dumpers. So are there basically early signs of any interest from the dumper operators?
I think if they have 1.5 years payback time for the 10-12 lakhs that they have to spend, so they are positive about that. That they are willing to experiment with that, and once we show them what is the average and what is the filling time, everything, and right now our infrastructure also is at a nascent stage there, so we have to set up some big CNG stations for refueling those dumpers and all. So that work is in progress, but for demonstration we can demonstrate in our 3 stations that we have commissioned, so that we can do. And as also the interstate buses.
160 interstate buses the Uttarakhand government has already bought, and I think around 150 or 200 is in the pipeline.
Sorry, how many buses they have already deployed, sir? Uttarakhand?
160, if I'm not wrong. 160 is they have already bought.
And 200 are in factory, sir. And their per day consumption, sir, or any broad understanding on the consumption that they have?
Around, I think,
normally if you say the 3 to 4 average and 80 to 100 kg consumption is there on per day basis, so they are around 300-400 kilometers. So 80 to 100 kg per day.
Sure, sir. Thank you so much for answering all those questions, and we'll get back in the queue.
Thank you, sir. We have our next question from the line of Raj Kiran Gandhi from SBI Mutual Funds. Please go ahead.
Hi, thanks for taking my question. So this DTC CNG buses which are going off the pool, can they be redeployed on by any other, these guys, people, this interstate buses who have to be replaced and all, this old diesel and all, so they can be immediately be put to use elsewhere, and that will kind of reduce the time to add bus also. So
So actually their life has, whatever 10, 15 years life is there, so that life is over. So they cannot be redeployed. So in case DTC wants to deploy CNG, they have to purchase new CNG buses.
Oh, okay. Sure. I was just wondering if these buses could be put to use for this interstate routes and all where they are using older diesel.
Not purchasing any new CNG buses. Whatever CNG buses they purchase, their life is getting over, and now they are purchasing the electric buses.
Okay, sure. And sir, just, some feedback we got was that this LPG and all, initially it was restricted to Morbi, but now increasingly even in the entire northern belt, the industrial LPG and all, the value chain is kind of making the distribution and all of that. So what kind of competition you are seeing in that sense?
Yeah, the pricing advantage is still there as far as the commercial segment is concerned with respect to LPG and natural gas. So there are some advantages, but in bulk industrial consumers, they offer some bulk discount. So that will be at par. So we have to bring out some strategies to counter that okay, we also offer some bulk discount to make it more favorable.
Okay, sure.
In that direction, we are working on some policy tweaks in that direction.
Sure. Thanks.
Thank you, sir.
One more input is there that recently there is some favorable because of the crude movement. So there is some 5 to 7% advantage.
Okay. Thanks.
Maybe we don't know because it's a volatile commodity. So, but present advantage is there.
Recent quarter, I think our volume growth of industrial has gone up. Probably this is also reflective of the CNG
and the price
has been cheaper. Some price advantage is there now, and if it continues, then we'll see higher growth in industrial segment.
Thank you. We have our next question from the line of Yogesh Patil from Dolat Capital. Please go ahead.
Thanks for taking my question, sir. Sir, my question is related to CNG absolute growth in the last 1 year from quarter 4 FY23 to quarter 4 FY24. So CNG volume addition is only 0.26 MMSCMD. But based on the CNG vehicle additions of 15.5 thousand per month vehicle additions, with the daily consumption of 3.5 SCM, and if we try to calculate it, it gives us a number 0.65 MMSCMD CNG volume. But actually, CNG volume growth is only 0.26 MMSCMD in last 1 year. Is it because of DTC?
Growth in the DTC segment?
Is it because of DTC conversions to EV impact, or this vehicle addition is a gross in number and the net vehicle addition would be little bit lower, which is hinting a lower CNG volume growth addition?
So DTC has definitely gone down last year from 3.5 lakh kg per day that we are selling to say 1.9, 1.85 to 9 right now what we are doing. So that is one impact. Second is that new additions, the sales impact maybe in the next quarter. So whatever additions are there, so they may get full benefit of those numbers will come in the next quarter.
Okay. And additionally, you may be right because the numbers which we are telling is a gross number. The vehicles which are going out of the system once their life is over, that number, that data is nowhere available. So we cannot really comment how many vehicles have gone out of the system. So some impact might be there as well because CG industry in Delhi is almost 20 years old. So some vehicles might be going out of the system.
Okay. My second question is related to if you could share the non-APM gas sourcing breakup. I mean, how much volume you are sourcing from the Reliance KG-D6 and LNG tire?
So the 28% breakup, 60% is Henry Hub linked and 40% is Brent JKM linked. So that's the broad breakup I can give you.
Okay.
And 2.5 is our quantity that we are sourcing.
2.5 MMSCMD, right?
Yes.
Okay. And the last one, sir, as per our understanding, the royalty or the trade margins on the sale of CNG at a retail outlets of OMC's issues have been settled. So can you give us an idea now total royalty you need to pay them per unit basis? How much it has increased?
The issue is, not settled as far as we are concerned. So we are disputing, especially the Delhi. Delhi and Mumbai, there is some dispute left. Other than that, it has been settled.
Okay. And currently, how much royalty we are now paying CNG?
Delhi, it's around more than 5.5 rupees, and little lesser than that in other geographical areas. So exact number would be difficult to share.
Yeah.
So that kind of number is there. And the question you were asking about the HPHT gas. So during the quarter, 0.38 million was the number for HPHT.
Okay. And is it a tied-up gas, or, sir, are we getting it on based upon the demand required?
It's tied up.
Oh, thanks. Thanks a lot, sir.
Thank you, sir. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to strictly one question per participant. Should you have a follow-up question, we would request you to rejoin the queue. We have our next question from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, good evening. Thanks for the opportunity. Just wanted to check, for DTC buses, Delhi DTC, so how many have already been retired and converted, and how many are left to be done, and is there a timeline to complete that process?
So around 1,200, 1,300 have gone off-road, and similar numbers, 1,300, 1,400 are balanced. In the next 2 years or so, they will go out.
So the 1,300 have been shifted to EV, or they have just been retired?
They have been retired and they have been replaced with EV.
Okay. And are there also buses that have been retired but not replaced yet?
No, because they need to run, the commuting has to be there. So whatever they are taking off, they are replacing with EV. In case EV is taking time, some of their tenders may take time, so they are continuing with the CNG buses.
Sure, got it. And what is the timeline for the balance conversion?
They have given us a timeline of 25-26. So by 25-26, 100% will be converted. DTC buses. DIMS may take a slightly longer time.
Got it. So basically that much, so the volume that you mentioned, which was 1.9 lakh kg, will essentially go down to zero by end of 26.
Yes.
Sure. Thank you. That's all from me.
Thank you, sir. We have our next question from the line of Sabri Hazaria from MK Global. Please go ahead.
Yeah, good evening. So two questions. So firstly, one bookkeeping question in terms of your OPEX was higher, as you mentioned, I think on the media, that it was because of certain CSR related expenses, right? So CSR in itself has gone up YOY because every Q4 CSR is generally there. But was it much higher this Q4?
No, actually this year, prior years, we were accounting every quarter. But last year, we did all the accounting in the last quarter. That was the reason. It's a one-time expense, you can say.
Okay, so the annualized trend will be largely in line with...
yes, so from this year onwards, it will be annualized only.
That was one. Another reason was last year we had taken some offset for the expenses which we had already incurred on higher side during FY2021-24. If you see the full year CSR expenditure, 22-23 we booked 14 crores, and in 23-24 we booked around 34 crores. So that's
no other item beyond this in the other expenditure. Everything else is normal, right? Is there anything else?
Apart from that, normal increase in...
one more increase was there, that employee increase one time because of the Silver Jubilee. So we rewarded the employees for their consistent performance. That is a one-time increase due to the Silver Jubilee celebration.
That is part of employee cost.
That would be part of employee benefit expenses, not other expenses. So apart from that, normal increase in R&M and few other heads, legal and professional is one where our case is going on with for Gurugram and Faridabad.
Right, got it.
It's in those two heads. Otherwise, it's all normal.
And what was the CNG station total number of stations at the end of the year?
882.
Excuse me?
Actually, we added the 126. Out of this, 90 were new stations and 30 were upgrade. Upgrade in the sense that we put up 2-3 dispensers on the existing stations. We upgraded the compression capacity. So you can say that 90 new stations and 36 upgradation of the existing stations. So total number would be 126.
And 882 is the total, grand total?
Cumulative, presently we have 882.
Okay, and in kg terms, what would be the CNG volumes?
kg terms, the compression capacity is 110 lakh per day, 110 lakh kg per day, and we are doing around 50-52.
Around 50?
Average. Those are on individual days. On weekends, it goes down.
Average is around?
The average is 4.5 million. 45 lakhs per day.
45 lakhs per day.
Right. So, sir,
average,
and just...
Average is 45.
45, okay, got it. And, sir,
sorry
last...
to interrupt, sir. Can you please...
Yeah, actually, these were like bookkeeping questions. I just have one main question. I thought I'd just finish this up. Is it possible to go ahead?
Please.
Yeah, so, sir, just on your volume front, so you've given a guidance of 9.5 MMSCMD, so this is like roughly like 13-14% sort of like YOY growth. Now, you've mentioned that in Delhi you'd be growing at, say, 5%, in NCR, rest of NCR probably 10%, and other GS as a whole 15-16%. So, Delhi being 60-70% of the mix, I think somehow the numbers don't add up. So, do you see anything, I mean, on top of that, like DTC is also like going down. So, is there anything else beyond these things that is making you confident of like clocking 9.5 MMSCMD?
Actually, one is the industrial segment, and Delhi NCR, the complete region. The industrial segment, we are confident that we can increase the volumes there, having 15% growth there. In addition to that, we have started the LNG operations also. So, if you see, there is a mention of LNG sales also.
Right.
That we commissioned in the last quarter. So those sales will come up, and we are in discussion with a few operators. So in case that volume ties up, so that will increase the numbers.
Okay, got it. Thank you so much and all the best. Yeah.
Thank you, sir. A reminder to all the participants to restrict their question to strictly one question per participant, as there are several participants. We have our next question from the line of Nitin Sharma from MC Pro Research. Please go ahead.
Hi, thank you. So what is the plan for the LNG segment from FY25 and FY26 perspective, and some quantitative data would be helpful?
I think we are planning to, one station we have already commissioned, and 5 to 6 stations are in advanced stage of planning and construction. So those should come on stream in this year. And we also have an MOU with Concall for their captive consumption. So we'll be setting up one station in their depot, one in Noida region and another in Bangalore.
And how much will be the volume?
So presently they have a fleet of around 100 buses. That is the number that we got there. But they are open to increasing those numbers based on their experience of these initial buses, the initial LNG trucks that they have. So they will increase the number as they get more and more experience of those running of those LNG trucks.
So just help me understand, in general, what would be the consumption for one bus, just to understand the content.
So one LNG, again, depending on the run, so that will consume 70 to 80, same number as bus or anywhere 70 to 80 kg per day.
Understood. Thank you.
Thank you, sir. We have our next question from the line of Chirag Maru from Keynote. Please go ahead.
Yeah, thank you for the opportunity. Sir, from the perspective of backward integration, I wanted to understand what kind of capex are we going to do for CVC plants?
We have, at least.
For this year, we are expecting that around 10 numbers of CBG plants will be adding, and the capex should be around anywhere between 200 to 300 crores.
And what kind of benefit can we expect from these, 10 to 15%?
These will be around, I think, 20 metric ton per day plant. And based on that, around if we are adding 10, then around 2 lakh CMD will be added to our source. And the benefit here is that this will be available in our GAs, and the transportation cost which is there from maybe western coast to our GA, that is the savings which we will have from the sourcing point of view. This will be the cheapest gas even as compared to APM gas.
Okay.
And in addition to that, Gujarat VAT is what additionally will save, which is presently levied on the gas which is coming from Gujarat.
Okay. And so I just wanted to understand one thing. A couple of private CGD companies are focusing on creating a hydrogen plant on an EPC basis for their clients. Is it something that I just wanted to know that if IGL is also pursuing something into a hydrogen space or not?
Yes, we are also, I think we are doing a pilot with IIT Jodhpur and IIT Delhi. Jointly, we are doing a pilot on hydrogen and see what is their impact on the network, on the transportation segment. So those study, and that will come up in Jodhpur area. So that pilot we are doing, and based on the study, further action will be taken.
So when can we expect an update on the same? In next 1 year time frame?
It should FY2024-25. We should see some results of that study.
Sure, sir. That is it from my side. Thank you.
Thank you, sir. We have our next question from the line of Kirtan Mehta from BOB Capital Markets. Please go ahead.
Thank you, sir, for this opportunity. One question on the cost side. When we look at our gas purchase cost sequential decrease, it is around 0.6 to 0.7 rupee per SCM. This has been lower than some of the other CGDs which have reported around 2 rupee per SCM cost decrease. The same has also happened during the last quarter as well, where again our decrease in the gas purchase cost was lower than the other CGDs. So are there any particular contracts which are restricting the decrease in the cost for us? Same was also the question was related also with the OPEX, where the run rate has gone up from 5.7 per SCM in the last quarter to 6.5 rupee per SCM. That's the second part of the question. So is there any one-offs in the OPEX that has increased this time? Will it revert to normal level again?
So I think the cost of gas for us has gone down by 3.5 rupees from 35.3 to 31.8. That's in SCM terms. So that is the number that I, please check the number. I think it has gone down by 3.5 rupees during the year as compared to the previous year.
I was actually talking to Q4 versus Q3 numbers, on Q4 versus Q2 numbers.
Okay. So that could be, I think, from 37 to 32.63 down, 50 paisa decrease on a sequential basis. Is that the number you're talking about? 50 paisa decrease in the sequential Q3 to Q4.
Yeah, when we compare this number with the other CGDs which have reported the result, this seems turning out lower, like the other CGDs have reported at least 2 rupee reduction sequentially?
Reduction in maybe the base is higher. I mean, they are doing 30, lower than 32. So the final number is important because maybe our Q3 was anyway lower.
Right, probably I'll take this query offline and come back again.
Okay.
In terms of the OPEX, the sequential run rate has grown to 6.5 rupee per SCM. So is this the new base or were there any one-offs during Q4?
So this is what I spoke about a little earlier, and we also talked about the CSR expenditure getting booked in the last quarter. That is one reason. And the Q4 we had some expenditure which we incurred on employee incentive, being 25th year of the IG's existence. So Silver Jubilee year we celebrated on December 21st. So those are the expenditures which have been probably added to the additional per SCM cost which you see.
Right, sir. Thank you. Thanks for this clarification.
Some adjustment would be with respect to India's adjustment also, where we had some long lease agreements, which this year turned out to be shorter term, and from right of use asset we moved to direct charge to the expenditure head. So it would have adjusted against depreciation. So some amount of that is also resulting in this additional amount which is visible to you per SCM.
Right, sir. Thank you.
Thank you, sir. We have our next question from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Thank you and good evening. If you're looking at the LNG business, can you explain the commercials in terms of at what price you're selling LNG per liter or per kg, and how do you compare that with the diesel price in terms of percentage savings?
You see, the LNG is priced at, say, 10 to 12 rupees lower than the diesel price, whatever it is there in the GA. So that, say, for example, if I take Ajmer example, so there the diesel is at, say, 96, 97 rupees. So it will be priced at 82, 83. Whatever is the CNG price, we try to keep it similar to that, so that there is some advantage to him to recover the initial capex, whatever capex he has incurred, and then the benefit is there for him. So 10 to 12 rupees gap with the diesel, and try to keep it, in case CNG price is there, because that will create some arbitrage opportunity otherwise. And whatever we are bringing the LNG from the ports, right now we are doing only at Ajmer. The LNG dispensing is only at Ajmer. So there we are seeing that we are able to maintain this margin, maintain this difference, and as well as keep our margin, whatever is the required margin.
So this 82 rupees will be rupees per kg?
Yeah, 10 to 12 rupees per kg, because that is in liter terms and this is in kg terms. So you can take it as equivalence, so 10 to 2 rupees cheaper.
So in terms of your EBITDA per kg, would it be comparable to your current EBITDA per kg on CNG, higher, lower? How do we work out the numbers if you add, say, 10 LNG stations over the next 2 years?
At this point of time, it is almost similar to what we are having the margin on CNG.
Okay. So just on the new GA, so incrementally, is there any addition to new GAs of a material nature, say 0.5 to 1 mmCM we can expect, say, in the next 1-2 years, say by 27? What is the kind of volume run rate you see from new GAs in MMSCMD?
So if you talk about significant contribution, Rewari is the one which is presently adding around 0.35 million. And apart from that, Muzaffarnagar is where we are achieving around 1.1 to 0.11 million, 0.11 million SCMD. So these are the two newer GAs where we have achieved significant volume. And going forward, this volume we expect to grow to maybe around 15% annually. In the newer GAs, Ajmer is where we last year we had started, and we are seeing for last 3-4 quarters we are seeing a growth of around 50, 60%, 100% on each quarter basis. But it has not achieved that critical mass which we can say that it is a significant volume. It is presently at around 0.08 kind of number. So here we expect that a few of these stations which were not online earlier, we have in this year we have made them online, and now we are focusing on marketing activities so that consumers are shifting to CNG. So here in Ajmer GA, we expect that by maybe next 2 years we should have some significant contribution. And apart from that, Banda Chitrkut Mohoba is where we started this. Last year we added around 4 stations. And going forward, those are all presently running on daughter booster basis. And our steel pipeline, trunk pipeline is in the process of getting constructed. So once those get online, then we can see some significant contribution there. Parallelly, we are working on marketing activities also, like conversion of dumpers to CNG. So those activities we are taking parallelly, and next, I think probably 2 years will take in building the basic infrastructure, and after that it should take off.
So one last thought, if you're looking at your material capex of 3,000 crores in the last 2 years, including FY25, if you take a gross capex of around 5,000 crores, just one last thought. On the capex, if you are spending around 3,000 crores on the new GAs, assuming the 5,000 crores the capex over 3 years, when do you see the earnings before interest and tax compensate for the increase in depreciation and give you the normalized ROC? Would that be by 27 or would it be more by 28?
So if I tell you about EBITDA being positive, so except Ajmer and Kanpur, Banda, of course, we have just started. All other GAs are already EBITDA positive. And Ajmer and Kanpur also, once we get a little more traction in terms of volume, the operating cost per SCM basis will turn positive, will be lower, and then that will also become EBITDA positive. In terms of gross margin, we are presently having sufficient margin available in those GAs as well. So once we achieve a little more volume in these GAs, EBITDA positive, I think by probably next year or next year, we should be able to be EBITDA positive on per SCM basis for all our GAs.
Thank you very much and wish you all the best.
Thank you.
Thank you, sir. Due to time constraint, that was the last question for today. I would now like to hand the conference over to Mr. Varatharajan for closing comments. Over to you, sir.
Thanks, Manav. My apologies to the people on the question queue. Please take it up with the management or send us the questions for those to be addressed. I wish to thank all the participants as well as the management of IGL for taking out time to participate in this conference call. Over to the management if they have any closing comments.
Thank you everybody for joining IGL's annual earnings call, and see you next time in the month of probably July. And special thanks to Rajan and team from Antique Broking. Thank you so much for organizing this call. Thank you so much.